Morning, Steve here in Chicago with the morning grain comments. Well, markets are lower overnight. I think there's maybe three reasons. Number one, we were calling the markets higher overnight yesterday because it looks like the forecast for northern, southern, and most of Argentina, Brazil over the next couple of weeks will be dry. We did see some above normal rainfall over parts of central Brazil overnight, and that could have caused some weakness. We're also hearing that the European trade deal may be in jeopardy, and so that could be offering some resistance to a lot of markets. And then finally, there is some word out there that U.S. may increase sanctions against Chinese officials, and I think that also raises concern about future China buying of U.S. Soybeans and corn. I think the bottom line is that funds are long, and it's the end of the year, and I think they may be trying to take out some of the long positions and wait till the January USDA report to see just how many changes the USDA makes in U.S. Carryouts. One group came out and said that the carryout for corn should be 1542. They said D1 stocks basically 12 billion versus 11.3 last year. And the D's February use, a little bit under 8.3 billion bushels versus 8 billion last year, with exports at 465 versus 270. For March, May, looking at almost 3.7 billion bushels of corn demand versus 2.9 last year, and exports at 672 versus 355. China will be taking 815 million bushels of U.S. corn versus 80 last year. So that could give some strength to the corn market down the road. In the beans, they're looking for a carryout of only 65, and we're looking at D1 stocks at 2.8 versus 3.2 last year. Exports 222 versus 77. D's February exports 905 versus 505 last year, and usage record 1.4 billion bushels versus a billion last year. March-May demand 744 versus 873, and exports could drop to 240 from 247 last year if South America kicks in on the demand. China's going to take almost 1.4 billion bushels of U.S. Soybean exports this year versus 583 last year. And looking at China soybean imports by country, 38 from the United States versus 16, 58 from Brazil versus 69.5 last year, and only 5.7 from Argentina versus 9 last year, which is a total of 102 million tons total imports versus 95 last year. The group also looks for 21-22 acres to be 91.7 in corn. 181 yield gives us 15.2 crop versus demand of 15.1, and a carryout of 1.7. In the beans, looking at 89 million acres, a 52 yield, a crop of 4.5 and a little bit higher, demand of 4.7 and a carryout of 200. So again, it looks to me like the tightest time frame for U.S. corn and soybeans could be that first quarter of 2021 and extending for corn into that second quarter. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And always remember, treat people like you would like to be treated yourself.